Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today, on my podcast, we've got Jeff Attwooll. Jeff has been a mortgage broker for 22 years. During his career, he's been through quite a few mortgage changes, from zero down payment programs in the 2007s to rental refinances up to 90% to now, which is way more stringent underwriting with values that are significantly higher. Jeff has owned his own Verico Franchise since 2017 as a principal broker. He's been on the CMP Top 75 Mortgage Production List since 2009. His volume in 2021 was $105 million in closed funding, which is approximately 240 files. He's been also a landlord for the past 15 years, which helps him with giving potential investors great insight into that plunge into their first rental property. Jeff's ethics have guided him through his roller coaster business to be always straight up with his clients and give them the advice they need to make the right decision. Whether that means he gets the business in the end or not is not a factor. His only real weapon is unbiased and extensive knowledge. Welcome to the show, Jeff.
Thanks, Harris. Thanks for having me. Appreciate it.
So 22 years is it's safe to say a decent tenure in the industry. What got you to become a mortgage broker? Was this something that you fell into? Was this something that you knew you were going to do from the beginning? What got you to get into the mortgage broker industry?
Yeah, so when I graduated from university, I wanted to be in the financial industry. Started at the bank as a, you fall into the bank as far as training. Great training there. Went to Royal Bank, became a personal banker. Started, doing mortgages, was there only a year and a half. Quickly realized, the bank, as far as servicing goes, they're lacking as far as, taking care of clients. So mortgages are, they're a specific, very complicated product. And, at the bank, they just sort of, it's like, jack of all trades as far as the branch. You're supposed to know investments, but you're supposed to know mortgages. I love, counseling people on, mortgages, debt, making sure that they, take care of their money properly. So I focused in on mortgage brokering. I had a friend who was doing it. He's older than myself. And I saw him one day and he said, hey, why don't you come talk to me when you're, kind of sick of the bank? And so I did one day, and I sat down with him at a Tim Hortons, and he told me what he does. And I said, wow, you get options for people, and it doesn't cost the client anything. And you can run your own business, which is what I wanted to do. Everything fit. Check, check, check. I went right back to the branch, put in my resignation, and the rest is history. So,
quick 10-second break. Are you finding this podcast useful? Do you want access to more resources just like this podcast? Sign up to one of our online workshops or our mailing list, and we'll send all the information you need right to your inbox. Good advice is hard to come by, especially in a market like today's. Sign up by visiting treadstonelaw.ca/MAS offer or click on the link below. Enjoy the rest of the podcast. Yeah, well, I mean, I feel like banks, if you went back 20, 30, 40 years ago, there wasn't as many mortgage products out there as well. Now it's insane. It's like insured, insurable, uninsurable. Like I'm a real estate lawyer. I work in the peripheral of what you do. I kind of see the effects of what is there, but I still just, it's like every day something is changing.
Yeah.
And to keep up with that is very difficult, especially if you're like at the bank trying to sell all these other products as well.
Right.
So for me, it never kind of made sense personally, not that I hate the banks,
Yep.
why you would go to a bank to get a mortgage.
Right. Yeah. It's daunting, right? Like the insurable, the uninsurable, the subprime, the constant innovation of mortgage products.
Uh,
So, the banks have recognized it. Some, they moved into the broker space in
yeah,
some way, shape, or form, right? They always they make a lot of money. So they recognize that they can't ignore this space. So they either own mortgage, lending companies. They invest in lending companies. Uh, Places like Royal Bank have their own broker division that they refer business to. So the banks realize that, hey, people are looking for specific
mm,
um, guidance, and their branches just lack
yeah.
in that case. So yeah,
I,
a lot of
I,
people want to
I
do
think
it.
it's just within the regulatory environment, and this is what I kind of, somebody asks me whether they should be looking for a broker or a bank. For me, it's always a no-brainer just because banks are great, but with the regulatory environment, I mean, and with so many products, they can't give you everything. So if they're selling a shoe size 10 and a 12, but you need an 11, they're going to give you a 12 because that's kind of what'll fit. But if you
Mhm.
want the right size, I always say go to a broker because they've got so many different lenders that they're kind of pulling in from. And somebody who has like the volume and the experience can, in a lot of ways, underwrite that deal themselves right before submitting it to the bank, knowing like, okay, based on, this person's characteristics, A, B, C, whatever they may be, these are my top three banks that I think would really do well for us. And it prevents the person from going to 100 institutions. Some of these institutions don't even have offices. They're only in the broker channel. So there's
Mhm.
no way of kind of grabbing and taking advantage of what they're offering.
Yes. It's and if it were me, right, I'd be reaching out for a mortgage. I want information quick.
Mm,
I want somebody to tell me, hey, this is where you stand quickly, and deliver that information quickly. And that's what I do, right? It's like I respect their time, obviously respect my own time. So, I'll get people reaching out saying, hey, I just want an idea. Where do I start? I want to get pre-approved. What does that
mm.
mean? They don't even know how to ask it sometimes, right? Like it's such a daunting thing for them.
I- I- I-
So
yeah.
I'll schedule a 5-minute phone call, 10 minutes, and just ask them some basic questions, and really be clear that this, it's not a real pre-approval, but it gives them a very good idea where they stand, and then give them, the next step on getting a pre-approval quickly. But it's the whole point of it is to give them that clear information quick with the knowledge that I have on the lenders that I deal with, which are quite a few, and I do have my top three. I think like any high producer
Mm-hmm.
does, right? And know them quite
Definitely.
well. That's diverse too. So yeah.
So, run me down like an experience with you. Like, if I want to get a mortgage, what happens? Do I give you a call? Should I shoot you an email? Like, what's the process from like beginning to end of what it's like working with you to get a mortgage?
Yeah. So yeah. So if you normally get referred or you see me online, it's however people want to communicate. Some people
Hmm.
want to communicate they'll shoot me an email. A lot of times it's probably more email than phone, but some people will phone me.
Hmm.
If it's an email, I'll say, hey, quickly, thanks for reaching out. When's a good time we can talk? So I'll set up like a 10-minute phone call to introduce myself, let them know the process, answer some very, pressing questions that they have right on their minds, because usually they have questions right when they reach out. People tend to kind of wait till they have to, you know,
Yeah, yeah,
get pre-approved to reach
yeah,
out. It's not like,
yeah.
oh, I should think ahead. Um, so we'll schedule a phone call. If it is a phone call, then if I have time, I'll do that phone call right then and there, and I will ask them some pre-qualifying questions. What's your income? It's very straightforward. What's their down payment? What's their credit like? I'll get my computer up and get up a dummy application, throw it in, and go based on what you've told me. This is kind of where it stands, and clearly say, as I said before, that hey, this doesn't represent a pre-approval. I don't have a credit check on you. The next step
Hmm.
is to either meet or to you can fill in an application on my website, and I send them an email after we've done the call, saying, here's the next step to get a pre-approval. Here's the link to my website. Please send me your
Hmm.
last pay stub and what I feel as though I need to, firmly make sure that they're pre-approved, and send it to them right after the phone call. So, whenever it's good for them, they can fill out the application. And some people want to meet, and I'm good with that. That there's a lot of, I guess, personal touch in that too. I like doing that, and that's
Yeah.
old school from me, being in the business 22 years. You never did back then. You never did everything virtually, but I'll do it both ways, whatever works.
I mean, you can never get rid of the in-person touch, but I do see the convenience of it just being digital, and you don't really have to take that time to drive down. I just feel like people's relationship with mortgages has changed, even though the amount is now enormous.
Yeah,
Like I feel like before people thought it was a big step. Now it's like it's a big step, but how much can I get? Because I need this house.
yeah, yes. It's the convenience age, right?
Yeah, yeah, yep, yep. So it's like it's a bit different, but when you do a pre-approval, cause and I ask because today in this day and age, in a lot of the markets in Ontario, it's very difficult to put in a financing condition. Um,
Right.
so when you do a pre-approval, what is that like? Is that like kind of you're saying that okay, it's not 100% sure, right? Because nothing's 100%. Um, but we're kind of there 90%, 95% to say that this
Yeah.
is kind of where the ballpark of where you're at. Is that kind of
Yeah.
like is that the process for your
Yes.
pre-approval? So I can go in and say, okay, I need to put in a firm offer. I've got Jeff on my side, so it's reasonable for me to think that I might get this, or is it like a pre-qualification? Because a lot of our listeners don't understand the difference between pre-qualification and pre-approval. Because there's a lot of ads online,
Mm.
60 cents, 60 seconds, and you get pre-qualified,
No.
and it's not the same.
Yeah. Yeah. I'm glad you brought that up. Right. So, um, yeah, there people are very confused by it, and rightfully so. So, when somebody gets pre-approved, basically their borrowing eligibility has been pre-approved. So, based on your income, based on your credit, yes, you can borrow this amount of money. The only thing that is not pre-approved is the property that they're buying, right? So you can go and buy this property, and knowing that I've done the credit check, I've gathered the income that I need.
Hmm.
I've literally turned over every single rock that needs to be turned over before they buy, so there's no surprises. Um, and so the only thing that's left is the property itself. And if you are going in and buying this property and there is multiple bids. I haven't seen a condition on financing, by the way, for probably a year and a half on
Yeah.
any offers that I've received.
Yeah.
So that just tells you, how many times I have to have this conversation with a client, and I make sure of that. But, the only thing that is not pre-approved is the property. So, I always get my clients to send me, copy of the listing up front. Let me know what they're going to go in at before they go in at it. Make sure that there's a backup plan too. So what I was saying about the property, if there's 10 offers on it, and let's say they're buying a condo in a building, okay, and they're setting a record in the building price wise, what they're willing to pay. Nothing else has been sold for higher than what they're willing to pay. Well, an appraisal might be needed on the property, and so the risk is that they go in firm, they overpay for a property, and now the appraisal gets done after the deal is firm and binding, and now if they're coming up with a minimum down payment of either 5% or a little bit more, or 20% right on the nose, that they don't have the funds to contribute if the appraisal comes in less, and they have to come in with the difference between what the appraiser says the property's worth and what they really bought it for, less the 20% down. So there's a lot in what I just said.
Yeah.
But
it's loaded.
The point of it is that the property needs to be figured out and looked at, and I rely on the realtor a lot. I have a conversation with a realtor, making sure that they've done comparables on the property, and that if there's a risk ahead of time, that they have a backup plan, maybe family, that can help them with coming in with some funds to make sure they close on the deal.
So you're kind of planning the contingency side of it from the beginning.
Yes.
Yeah. And you know what? Like I'm in the same boat as you. I haven't seen any kind of closing so far with a financing condition. From a legal perspective, it does unnerve me a lot of times. And a lot of times, the thing is a lot of times, okay, so if your clients are going in, they at least have gotten you to do the homework. Some people have not done their homework. They start their process after the firm offer, and it's already a risk, like you just explained, where I mean you're getting approved twice. You have to get approved, and your property's got to get approved. It's not like it's a one and done. So at least kind of do half of the work, and then the second half there's as much as you can do. Some people are kind of just going in, they bid, and after that they're kind of running around and saying, hey, I don't have any money, because they've gone online and there's a 60-second pre-qualification. They said you can afford the moon. They're like, all right, that's great. When they come back, they realize, well, every dollar is not the same dollar, right? And you would know that better than I would, where like for income, whether you're full-time, part-time, self-employed, all these other things, they're the same dollar. It's not counted as the same dollar. There's different ways to calculate your income, which people don't really realize.
Correct. There is so many things, Harris, that if you haven't been fully vetted through somebody who knows what they're doing, you're playing with fire. Going in on a firm and binding transaction. Self-employed income, yes. There's so many different things that can trip you up once you actually go and get that mortgage commitment, when you've got a firm and binding agreement. So it's kind of scary in my opinion.
So now, just to change gears a little bit, I want to talk about a little bit about the market. I'm going to ask you a crystal ball question straight out of the gate. The rate environments
it's in the shop right now. It's getting tuned, but it's coming back.
We'll try. So rates are going up. We've got a 25 basis point increase that the Bank of Canada did. And then everybody's kind of saying, we're going to do 7 or whatever rate hikes, where do you see, like, I'm not asking for an exact rate, maybe
Yeah.
a range. Where do you see the rates at, like, December 2022? Where do you see the market headed?
I love that you asked this question because now it's like firmly recorded and for the future. And, like if you predict, nobody, remembers somebody that doesn't get it right. But if you get it right, you might be remembered.
Yeah.
So, where I see rates December 2022, so fixed rates, I never would have predicted they're this high now. But inflation is on fire, obviously. So, as far as the fixed rates, they're now at major banks. They're approaching, they're around 3.7, 3.8%. So I don't think inflation is going to get doused anytime soon. I see them peaking. Well, I see them in December at about around 4%, maybe in the very low fours. And so as far as the variable rates, I think a 0.5% increase next month with the Bank of Canada is a possibility, a decent possibility, but that would be a big jump. But a quarter, but that being variable rates being higher by, I would say 0.75 to 1% increase. So now we've got a variable rate, let's say a 1% at 3%, and the fixed rates being in the 4%, very low 4% range, which if you would ask me that, like if you would have told me that, or I would have predicted that a year ago, a year and a half ago, I would be like, it's crazy.
But are you is this kind of estimate prediction kind of revolving around the inflation more than anything else?
Yep.
Or is it
Yep.
housing market? So you're just saying that because of inflation, we're going to be forced to push up rates.
Yep. Inflation is everything. Inflation predicts rates on variable and fixed in every way, shape, or form. Inflation shapes our everything that we in real estate, mortgage rates wise.
So would you then still get or advise clients to take on a variable mortgage if we're going into an increasing environment, or would you say move more towards fixed?
It's a good question. So it all depends on the client themselves, right? So if the client is, can afford a risk that way, and maybe their incomes to what they're buying, there's some room there. They're not stretching themselves huge. Then I like the variable rate over the fixed in that case. In fact, I do like the variable over the fixed regardless, but it's not for everybody, because you've got a first-time home buyer and they've got an income that's not going to go up much. Maybe they're in a government job and they're going to move up a little bit, and they're stretching themselves to begin with. A 5-year fixed rate may be better for them, right? For them to sleep at nights. There's some people that are nervous in general. Being stressed out about rates going up is not worth it, just to maybe win out on, 0.5% over a 5-year term if they can't sleep at night, right? Some people just are nervous. And so, but I would say in general, I like the variable over the fixed for sure.
So you're saying your advice is not just based on the interest rate itself. You're saying that based on the risk tolerance of your clients and their own kind of emotions and their personality, you would advise fixed to the right person who falls under certain characteristics. Is that right?
Yeah, that's right.
But what would you say is going to, let's say the emotions are like not in question, what would you say is going to outperform in the next 3 years, if you had to take a guess? I know the crystal ball's in the shop.
Variable.
Variable?
Yeah. I do believe we'll outperform the fixed rates. You're just looking at a conventional uninsurable variable today at say 1.9%. And then a fixed rate at 3.7%, right? Like that's huge gap.
Yeah.
So I think all day long the variable is going to win as opposed to the fixed.
Yeah.
The only risk is that inflation catches fire a little bit, and perhaps the Bank of Canada has to move a lot more than what most people are predicting that do this for a living in terms of economists and such, right? So,
Yeah.
but all kind of forecasts look at I think the variable rate being better than the fixed rate. And if you can couple that and strategize that with, I tell my clients, if they're going to take the variable, pay it as if it's a fixed rate. You can afford a 3.5% interest rate. Take the variable rate at say a little less than 2% and pay it as if it's a fixed rate today. You're not only hedging yourselves for rate increases in the future because you're used to paying that payment. That amount, an extra amount's going on your principal, and you're paying off your mortgage quick, right?
Yeah. So awesome. Great advice. I think that wraps up our podcast. That was some great information. Thank you for coming on the show. Thank you for sharing your advice, Jeff. I'm going to be putting Jeff's contact information below if anybody wants to reach out and have a conversation about fixed and variable and see if that crystal ball's back. Thanks for
Thanks,
coming on the
Harris.
show.
Thanks for having me. Have a good day.
You too. Bye.